Impatience is a storm that silences the strongest objections of the soul. When that moment arrives, reason is muted and replaced by an uncontrollable desire. The urge for fast money, in particular, creates a dangerous allure. As a person becomes intoxicated by the dream of rapid wealth, the inherent risks of that journey are rendered invisible. The promise of great profit wipes away all warning signs in an instant. Because the mind, instead of grappling with present difficulties, demands the final reward immediately. People want the outcome, not the process, the title, not the effort behind it. Because of this deep and widespread desire, the calm guidance of reason is quickly abandoned, and logic gives way to haste. Every step taken in haste is like building a tower on grains of sand rather than on solid ground. Impatience is the most insidious opiate enveloping the soul of the modern individual. Once its whisper begins to spread, reason is silenced and common sense retreats into a corner. This search for instant gratification becomes especially destructive in financial matters. The desire for fast money draws a veil over our eyes. The allure of large, shining numbers completely obscures the massive scale of risk ahead. That inner voice, meant to stay alert, is drowned out by the noise of impulsive excitement. Because we desire results, not processes. We want the moment of victory at the destination, not the long, tedious journey of effort. For this reason, the calm guidance of logic is quickly abandoned and replaced by restless urgency. This urgency is often reinforced by easily obtained gains. Easy money rarely receives the value it deserves in the mind. Wealth earned without effort or sacrifice is, unfortunately, not protected. Because it came so easily, there is no instinct to hold on to it or preserve it. This disables a vital braking mechanism, the fear of loss. When one does not fear losing, irrational risk-taking increases. Ease becomes a habit, and the individual comforts themselves with a dangerous illusion. I can always make that money again. This belief creates a cycle of loss. The true measure of wealth is not the momentary fullness of a wallet, but the patience, discipline, and effort required to build and sustain it. In modern financial markets, a dangerous transformation occurs. The line between gambling and investing disappears. This erosion begins with the hope of quick profits. Short-term, sudden return expectations destroy strategy. Strategy that requires discipline and long-term planning. Waiting is no longer important. What matters is catching the next big wave. In this environment, the language of financial instruments also changes. Leverage, high-risk bets, and speculation are skillfully marketed as investment. Risky trades begin to appear as legitimate paths to long-term portfolio building. A few successful fast trades, often driven by luck, are quickly mistaken for skill. People begin to believe they have cracked the market, beaten the system. Yet the fundamental difference between gambling and investing lies in risk management and mathematical expectation. One plays against probability. The other invests in time and value. When that line disappears, all that remains is uncontrolled excitement and inevitable collapse. Financial speed is a dangerous journey, and debt and leverage accelerate the disaster. The appeal is simple. People seek wealth not with their own capital, but with borrowed money. Debt and leverage promise to turn small gains into massive returns. At first, this system creates a flawless illusion. As profits grow, the large and constant debt beneath becomes an invisible detail. While balances multiply, obligations fade into irrelevance. This creates dangerous overconfidence based on the assumption that market conditions will remain favorable forever. But leverage is a double-edged sword. It multiplies gains on the way up and losses on the way down. The system is so fragile that even a small mistake can erase everything. A minor market pullback can instantly wipe out all capital, and more. Towers built on debt stand on weak foundations and collapse at the slightest tremor. The greatest illusion of the digital age lives on social media. Social media distorts reality because it is a carefully curated stage. Its primary rule is simple: winners shout, losers stay silent. Those who display financial success, luxury lifestyles, or momentary victories amplify their voices. The 10 losses behind those gains quietly disappear. What we see repeatedly are not truths, but polished fragments. Risks, mistakes, and failures are kept outside the frame. The individual observing this false showcase enters an inevitable cycle. People compare their own complex, volatile lives with the flawless outcomes displayed online. This comparison fuels inadequacy and encourages irrational risk-taking. Because the showcase whispers that fast and easy victory is possible, while real life demands patience and consistency. One of the most subtle traps in financial markets is the psychological impact of small victories. Gains are temporary. Overconfidence leaves permanent damage. After a few successful trades or a lucky windfall, a dangerous mental shift occurs. Fast profit creates an illusion of mastery. People believe they have solved the market, uncovered its hidden rules. Risks, statistics, and probabilities are ignored. Individuals assume risk is under control, as if they could change market direction at the push of a button. But this confidence is a tower without a foundation. Markets are not designed to forgive ego or illusion. No matter how intelligent or skilled one believes themselves to be, the market obeys its own laws. A single mistake or sudden downturn can erase that false mastery instantly, leaving behind deep and lasting financial damage. The ultimate rule of financial discipline is this: the market punishes impatience. For those chasing fast gains, markets are not waiting rooms. They do not wait for the impatient. The best opportunities and most profitable moves reveal themselves quietly to those who wait patiently with a long-term perspective. True rewards go to the slow, because markets reward consistency and discipline, not impulsive excitement. The punishment for haste often arrives silently: a slowly eroding portfolio, unnoticed opportunity costs, or commissions that bleed capital over time. Impatience is not a sudden shock. It is a vortex that consumes wealth gradually. The pursuit of fast money demands a psychological toll. Fast money can destroy the mind. Initial excitement and hunger for profit quickly give way to deep anxiety. As bets grow larger, fear of loss brings sleepless nights. Nights turn into endless mental calculations of potential losses and missed opportunities. This creates chronic stress and regret that spill into daily life. Mind and body remain in constant combat mode. Exhaustion dulls rational thinking, causing stress and regret to distort decisions, often leading to even greater mistakes. The most painful truth is this: money may be lost and regained, but the psychological trauma, damaged relationships, and ruined health left behind are not easily restored. The pursuit of fast money promises dazzling freedom. In moments when impatience silences reason, the illusion of effortless wealth dominates. Yet this journey almost always ends in the opposite direction. The false mastery created by easy gains and leveraged risks may offer brief success, but it usually leaves behind heavy debt, permanent fear, and deep regret. Markets do not wait for the impatient because rewards belong to the slow. In the long run, only consistency, patience, and discipline win. Those who rush do not gain. They pay the price